Good morning, everybody, and welcome to Latching On to Trends with myself, Jody Samuels, and Juan Maldonado, an Elliott Wave solution. As you know by now, we are Elliott Wave technicians. That's our niche in the market. So everything that we do, we use an Elliott Wave-based analysis. Now, we also use strategy, which I will talk to you about. But Elliott Wave is the way we map out the market moves so that we have a good idea where the market will move to, and we can then take action as traders. So let's get started. Please read the disclaimer to yourselves. So today we're going to do a little bit of theory, talking to you about latching onto trends using Elliott Wave lenses. Then I'm going to pass it over to Juan, who is going to do wave counts for the Euro, the Aussie, and the Dollar Canada. So first, let's talk about the three pillars of trading success: analysis, strategy, and coaching and accountability. Without one of these pillars, it's highly unlikely that a trader will be very successful at trading. Many traders have pieces of this, but I think it's time for traders to put it all together so that you do a little bit of the analysis, the strategy, and the coaching and the accountability. So let's talk about the analysis. A key pillar of achieving consistency is to have a thorough knowledge of the market to determine possible future scenarios and be prepared to take advantage of opportunities that arise. In our system, and I'm just reading this out with you so you can read together with me, in our system, we use Elliott Wave Analysis in order to have market context and increase the likelihood of successful outcomes. So that's exactly what Elliott Wave Analysis does. As you will see when Juan shows you analysis on 3 different currency markets, it provides the market context by doing a top-down approach. So starting with the daily and working on down to the hourly or the 15-minute or even the 5-minute, you have a good idea. Your brain knows what the direction of the market is by doing that top-down approach. Now, certainly, if you're a day trader and you just have a look at the smaller time frames, like the 15-minute, the 5-minute, the 1-minute, whatever you're trading as a day trader, as a momentum trader, if you don't have that market context, yes, you're trading with the price action, but you can maximize your profitability by growing a little bit and just really understanding the market cycles, because that's what it's all about, the market cycles, understanding the trends and the corrective sequences. So the strategy is the next pillar, and we use a strategy called the wavy tunnel. It's the second pillar to reaching the path to success is to have a highly effective strategy, which is easy to understand when making a trading decision. So we want to keep it simple. After a good analysis, strategy is used to identify the exact entry point, the stop loss level, and the profit target, to know when to trade and when to stay out of the market, and removing the emotions is key. So what does the analysis do? The analysis gives us the direction of the market that we want to trade in. And then the strategy gives us the exact trigger point, stop loss level, and profit target. So that's our trade plan. It's really important to have a trade plan based on the market analysis. And that's one way to remove the emotions, because as you all know, the market can be very, very emotional. And in fact, that's the subject of a book that I've just written, which will be published hopefully this summer. And it's all about riding the trader's pendulum, riding the market cycles, and how we can combat that as traders, how we can attempt to, you know, when you ride it when you're a little kid, you sit on the teeter-totter, right? And one person sits on one side, the other person sits on the other side. When it's balanced, both are equal. So that's what we want to do. We want to balance our emotions and be at the fulcrum of that teeter-totter. We want to be balanced between fear and greed. And one way to do that is to have our trade plan intact. Third pillar, coaching and accountability. Read with me. To combine all the knowledge and apply it properly, you need the third pillar, which is coaching, an expert to evaluate your trades and give you feedback to correct the mistakes and polish the entries and exits. Accountability is key, even if you grab a trading buddy to share your trades with, plan your goals, and receive feedback. It's really important to be accountable. So, and trading can be a very lonely game, as you know, if you're just off doing it on your own. So it's really important to have a trading buddy that you can bounce your trades off of. And maybe the trading buddy is like-minded, so you've learned the same strategy together, and you can just bounce your ideas off of the other person to just be accountable to someone. And also to let that person know the trades that you've taken, good or bad, unsuccessful or successful. Very, very important. Analysis. So Ralph Nelson Elliott studied various markets over a 75-year period in the 1930s. So he studied hand-drawn charts, and he discovered that stock markets traded in repetitive cycles. And he was bedridden when he decided to take on this enormous task. And he didn't have a computer at the time, of course. So what he discovered was that these cycles or waves reflected the emotions of investors. And he developed the wave principle, where he tied these patterns, these cycles, which were named waves, to collective human behavior related to Fibonacci numbers. That's right. Elliott waves are related to the Fibonacci sequence. And for those of you that are very familiar with Fibonacci, you can see the sequence on this 8-wave cycle. The 8-wave cycle, the 5-wave trend on the left, and the 3-wave correction on the right, which happens to be a zigzag pattern in Elliott wave terminology. So that's the complete market cycle. And you can see from this market cycle, you can see chart patterns as well. You can see lots of head and shoulders patterns. And you're all familiar with head and shoulders patterns. So and reverse head and shoulders patterns. So when you start to recognize that these cycles create these head and shoulders patterns with an A1, that's the reverse, or the top of the market, the end of the market, 3, 4, 5, 1, 2, 3, for the A wave, then you will have it'll all begin to make sense for you, especially if you study chart patterns. One thing that we love about Elliott Wave Analysis is that the markets are fractal. And what that means is that the patterns repeat in every time frame and in every market. So once you learn the patterns, then you'll be able to see the patterns and trade the patterns and internalize the patterns. And that's what we mean when we say fractal. So, and this doesn't only occur in markets, it occurs in nature. Branches of the tree, the clouds in the sky. Nature is fractal based on the science of chaos. So this is a fractal image, and this is also based on Fibonacci formulas, and you can see the pattern repeating itself over and over again. Here's another image with patterns repeating over and over again, and this is what you're familiar with, the patterns repeating in the markets. So this is the fractal nature. So I would strongly recommend, whether you learn with us using our wavy tunnel system or you have your own strategy, that you learn the patterns and you really internalize them so that when you see them in the market, your trade plan just stands out for you and you can just pull the trigger, set your stop loss, and set your profit targets. So we would hope that you would join our program. We have a terrific program. We have lots of students in it right now. I'm going to give you an opportunity at the end to learn about it after Juan does his analysis. But let's just talk a little bit about trending versus sideways markets. And these are the market cycles. So there are really only 3 things a currency pair can do: go up, go down, and go sideways. And for those of you just starting out, or for even those of you who have been trading for a while, have you noticed that at some point in your trading career, you have taken out of 10 trades, you might have 8 losing trades because you thought the market was going to go up and it went down, or vice versa. Well, I'm going to give you a little clue. If that is happening to you currently, then guess what? When you think something is going to go up, go the other way, sell it. So instead of having 8 losing trades in a row, an 80% loss ratio, you can convert that to an 80% win ratio. Now, if you're successful and you do have your 60, 70, 80% win ratio, it's fantastic. Then you're going to learn how to extend your gains and limit your losses a bit more in order to increase your profitability. So there are things that we can do at every step of the way as traders to increase our profitability. So I'm just going to show you a little bit more on the market cycles. So here you see 3 market cycles. The red is the longer term, maybe it's the daily, the green might be the 4-hour, the dotted might be the hourly or the 15-minute. And this illustrates how the markets break down into the sub-waves. So the green would be sub-waves of the red. The dotted would be sub-waves of the green. And this is how the markets unfold, and this is another illustration of the fractals in the market. What happens at the end of a trend? First, let's back up. Let's talk about trends. So trends are, downtrend is lower highs and lower lows. And as a trader, you want to get in at these points right here. So you want to think sell on strength. And it's a little bit counterintuitive. Why? Because when the market is going up, you're thinking about buying, especially if you're a momentum trader or a day trader, you're going to be buying up here, okay? When in fact, you might want to consider waiting and selling to catch this trend, because the path of least resistance is going to be with the trend. So instead of thinking buy, be a little bit counterintuitive and train the brain to think sell on strength. And this is something that I trained my traders. You know, I traded for an institution on Wall Street for 15 years. I had a desk of traders reporting to me, and I'm teaching you the same skills that I taught them. So I was an institutional trader for that long in the markets, trading a lot of money. So train your brain, think sell on strength. And in this uptrend, think buy on weakness, train your brain. Now, don't think about exiting the end of the trend until it really ends. And how do you know that it's going to end? Well, down here we have a nice little pattern called the 1, 2, 3 reversal pattern, which is a confirmation pattern which starts the trend in the opposite direction. Point 1 at the bottom, point 2, the market moves up. Point 3, the market corrects, and now we're at the crossroads. We can either go up or we can either go down. Which way do we go? We might not know at this point. If we go down, we're going to make a new low. If we go up, then we're starting a new trend in the opposite direction. So you can be conservative and you can wait for this point to break before buying the trend in the opposite direction. So 1, 2, 3 reversal, key. End of the trend, what we look for, and then I think I only have 2 more minutes because we started 5 minutes late. So end of the trend with divergence followed by trend line break. That's the little note here. So what happens with the change in trend? You see divergence, and that's when price makes a new high and the oscillator doesn't. So the market is running out of steam. You have a trend line break and you have a 1, 2, 3 reversal. This is a simple little trading system that you can use to figure out when the trend is changing direction. Now, if you had your wave counts and you would use this as your confirmation, so you already have in your mind that the market is going to turn around because the market has completed its 5-wave sequence, that's even better, because the more confidence you have as a trader, the better off you're going to be. in backing your trading decisions. So the other thing that I'll mention is that trends usually stay within parallel channels, and at this juncture, you don't know if we're going to go down or up. If we have a trend line break, you need to think sell because we're breaking through the channel, and otherwise, you would continue to think buy at this point. And of course, this is what actually happens. It actually breaks down. But you really don't know unless you have your great Elliott Wave count, and this is the Canadian dollar, so Juan is actually going to show you the Canadian dollar now. So this actually went down. Okay, so this just illustrates a little bit more of drawing your channels and looking for reversals for the market to change direction. I think at this point I'm going to turn it over to Juan, who is going to do an analysis on the Euro, the Aussie, and the Canada. And then I'm going to take it back at the end, and I'm going to show you what we're currently doing with our students, and I think you're going to be very pleasantly surprised.
Traders, and thank you for being here. That was great, Jody. Thank you very much. So I'm going to explain the Elliott Wave counts on the Euro, the Aussie, and finally the CAD. The Elliott Wave counts, most of the times you're going to hear that this is subjective because you can see different wave counts. Each analyst can do his own wave count and it's just place the waves, and it can be subjective. But we think that Elliott Wave is the roadmap, is our GPS to follow the markets, and it's fantastic. So what I'm going to do today with these instruments is that I'm going to explain the actual wave count. You don't need to be an Elliott Wave expert to understand these concepts. It's going to be very easy. And at the end of each instrument, together we are going to create a trading plan for the upcoming week, for the upcoming month. So that's going to be the exercise today. So let's start. This is the weekly chart. Always when you're analyzing any instrument, can be in Forex, can be in the stock market, any instrument, start from the big picture. That's extremely important because from the big picture, you can have the direction, the main direction of the trend. You can understand if you're in a sideways market, you can understand if the market is trending, and then you can go to lower time frames. So that's why, that's one of the first topics of how we can use Elliott Wave to help us trading, and is that Elliott Wave can give us the whole picture all the time. When you go to the 5-minute chart and you have your wave count from the weekly, from the monthly chart, you are going to have all the time frames on the 5-minute chart. You're going to keep the sense of the market. You are going to have the direction of the market in all your time frames. If you don't have Elliott Wave, if you don't use this technique, then it's going to be difficult to remember once you go to the next time frame what is the big picture telling you. But with Elliott Wave, you can have all the time frames in the one that you are seeing. So first of all, what we do is we analyze if the market is corrective or if the market is trending. And that's pretty easy to do. You just need to draw a box, and if you see the price that is reacting inside is sideways, and when you see that the market is creating new lows, there is a trend. So that's the definition of a sideways and a trending market. Very easy. When the market is sideways, it's more difficult to trade. It's going to be more complex, the waves inside. But when the market is trending, like the euro right now, it's very easy to trade, because all what you need to do is to follow the price and follow the retracements in order to go short and go short and go short. And you must use your oscillators during the retracements to find the overbought areas, to find the end of the retracements, because usually what we try to do with the oscillators when we are losing money is that we see a trend, a strong trend. Of course, you are going to see the oscillators in the oversold area, and you're going to try to buy, and it's not going to work because eventually, and this can be any time frame, eventually the price will make a new low. So that's something to keep in mind, that when the market is trending, you need to use the oscillators during the retracements in order to find the best price to go short. So we have this wave count. Mainly, we are saying that the euro is going lower, is going to the par or lower. So the target that we can set on the weekly is going to be the par list. So that's going to be our target on the weekly chart. Also, when we were following this wave 3, and something that I forget to mention is that the markets are fractal, which means that we have cycles inside the cycles, or waves inside the waves, and more waves inside the waves. So it's like a game to understand everything. I know that wave theory can be subjective. We have been designing some additional tools, working with channels, with oscillators, creating some rules to help us to reduce that subjective part of the theory, and it works fantastic. So for example, for this wave 3, if you have been attending our webinars before, you know that our target has been for that wave 3, the 105.45. 105.45. So the price went to the 104.57. This is the weekly chart, so not bad. The target was hit and reverse, and now it's in a sideways consolidation. What we are doing right now is finding the end of the wave 4, this wave 4 magenta, to go short. On the daily chart, we can start looking inside those waves. So I'm going to hide some waves again, because this looks too complex. There we go. So mainly, what we are working here is a consolidation for a wave 4 to continue to where? To the par, at least, because we already say it on the weekly chart. So in terms of day trading, the current cycle is one of the most complex, the wave 4. The wave 4 inside, we have waves inside the waves. So always the wave 4 is complex. If you don't have Elliott wave, you can't be ready for a complex cycle, because each wave has its own personality, and depending on the wave, you know how complex the cycle is going to be. So when you are dealing with the wave 4, you are going to be extremely careful trading inside. Let's continue. Let's go to the 4-hour chart, and we are getting closer to the actual market to create our trading plan. So what's the plan? We think that the wave 4, well, let's go back quickly to the daily. We think that the wave 4 magenta is going to end on the area of the 113.80, 114.30 area. Why? Because the wave theory says that the wave 4 most of the times is going to end at the 38.2% of retracement of the wave 3. Also, if you learn the wave theory, you can apply correctly Fibonacci. It's something that is also complex to do if you don't have Elliott wave, because you don't know from where to where run the Fibo tool. So that's one of the guidelines that is supporting the idea. Plus, the other guideline is that usually the wave 4 ends at the previous wave 4 area. So as we already mentioned, we have waves inside the waves, and the wave 4 for the wave 3 is the previous wave 4, and that's the other zone to consider the end of the wave 4. So now that we understand that, let's find the setup inside this complex price action. Without Elliott wave trading, this is complex. Okay. So the plan, in order to see the price going there, is to have this 3-wave sequence up, 3 waves up. Of course, we need to be extremely careful with the resistance at the 110, 20 area. 110, 20, 110, 50 area. Because the price already tried to break out that level 3 times and it couldn't. Let's see if this time it's going to make it. So the trading plan that we can develop in order to follow the waves is that on the hourly chart, the price completed an impulse up. It's not the ideal impulse, because in this case it's something called a diagonal wave, but don't worry about it. So in order to find the high probability trade, it's important to analyze this wave 2, the wave 2 orange. From the higher time frames perspective, we are looking to buy. Okay, so once we go to lower time frames, what we are doing is finding the best place to trigger the trade, because we want a small stop loss and a big profit. Let's add the Fibo retracement for the wave 2 in this case. One of the guidelines of the theory of the Elliott wave theory is that the wave 2 usually is a dip wave, which visits the 61.8 or the 78.6% for the wave 2. So this price action that we have here, the 3-wave sequence for this wave X green, is something called a bullish trap. Because a lot of people are buying during this move up, but it's a corrective sequence. So once you learn Elliott wave, you know that the price is going to drop, and it's most likely to break out the 106.64 first. So it's going to make a 3-wave sequence, 3 waves down. How you can forecast this without the wave theory, with the naked chart, is difficult to know. And here is fantastic because we have all the time frames working for us in the same chart. Okay. So if you have a trading strategy that can tell you when a cycle is complete, you can apply it, or you can just go with something more simple, like a channel. So once the price enters the wave 2, here first is going to make a new low here below the 106.61, and after that is going to break out the channel. So if you don't have a technique like the one that we teach to catch the trade at the end of the move to confirm before the breakout of the channel, that's fine. You can trade above the channel, or you can use some price action techniques or candlestick reversals in order to find the end of the wave 2 and leave your stop loss at the previous low of the 105.17. So it's important to validate the end of the waves. If the price remains inside the channel, is a good trade. If the price makes a huge red candle to the downside, you are not going to take it, of course, because you want to see a reversal. You want to see that this is working and that the price is going to turn around. So that's going to be the setup for the euro. Let's follow during the following weeks. And if you have questions about this setup, you can contact us. Now let's take a quick look on the Aussie. Quicker than the euro. Let's just start from the daily chart. So the plan on the Aussie, I'm going to hide some of the waves, is that we are going down and the price is building the wave 2. The main trade or the swing trade is to go short and managing this as a consolidation. So when we go to lower time frames, what we are doing is understanding the behavior of that wave 2 orange in order to plan the trade. So if we add the Fibo, and I'm going to hide here again some of the waves, I'm going to add now the Fibo retracement. We can see that the price already hit the 61.8, tried to win to the 78.6, but it failed. And just with Fibonacci is not enough, because those are the Fibonacci tools is a technique to find support and resistance, but it doesn't mean that is going to exactly there turn around, or exactly there is gonna is going to change or is going to trigger a trade. Those are just support and resistance. So let's add the inside waves and we can validate better what's going on. Okay, so I'm thinking that the move up is not over yet. The main trade is short. The main trade is short. But analyzing the waves inside, I couldn't see the end of the cycle up here. So I'm labeling this as an impulse, 1, 2, 3, 4. We have a nice three waves expanded, flat, three waves for the wave 4. And now the price is reversing, which means that the target, and we have a service, I do a daily video explaining all the setups. And at the beginning of the week, I was warning about this reversal, and the target is the previous high at least. Because once we have the completion of this move up, that I would like to see it at the 88.6% of retracement, of course, with this losing momentum, right? On that area, I would like to trigger my short trade. While that happens, you can go to lower time frames and buy and do day trading inside, because the wave theory works for all time frames, all kind of traders. If you're looking for the swing, you're going to wait for the end of the wave 2. If you're a day trader, you're going to find the wave count inside. So it's going to work for all the traders. Something to keep in mind is that in case that you see eventually a green candle like this one, for example, you are not going to go against that. If you see that the momentum is increasing, you are not going to think that you want to go short. Anyway, here is the invalidation, the 100%. But anyway, always when we are looking for the end of a corrective wave, we need to look at price losing momentum. So it's something that you need to learn about the validation of the waves, because not necessarily an invalidation of an Elliott wave count is a bad trade, because if you have a huge candle, you're not going to trigger. So that's important to keep in mind. So that's going to be the plan. And once we have the reversal for the wave number 2, if you like, you can take note of that target, the 78.92. The next destination is going to be the previous low, 75.55. 75.55. And mainly, to keep it simple, this is trading in a range. This is trading in a range. So this is a big box. And the plan is to short at the top of the box. That is also the 88.6%. And take profits at the low zone of the box, because it's a sideways market. Elliott Wave also works nicely here, but it's a sideways market. So always we need to keep in mind what we are doing. And finally, we have the dollar CAD. The dollar CAD is setting up a nice trade right now. Let's start from the daily chart. Is making a wave 4. This complex and wave 4 that looks scary, but actually is very simple. So to keep it simple, is completing the wave 4 here, and once the wave 4 is complete, it's going to turn around and it's going to go up to the 128.36. Actually, it's going higher, but just to be conservative, that's going to be the target, 128.35 area, the previous high. But until that happens, you can trade, because inside the waves, the market is fractal. We have a nice 1, 2, 3. This is a wave 4 that is getting ready, the wave number 5 down. So I think that wave 4 is complete, and the target will be the 120.90. So this could be a nice day trade for the session. Here you can add some additional things, like something from the classical technical analysis. You can add here the channel. And if you don't have a strategy like the one we teach, or an advanced strategy to catch the end of a cycle, because that's the game, that's the plan, to find the confirmation of the end of the wave at the best price possible. but it's difficult when you are trading live. You need advanced tools to do that. If you don't have that knowledge, then just wait for the breakout of the channel. This is known as bearish flag in the classical technical analysis, and you can target the previous low. These kind of trades are like 1-to-1, but those are good. But don't forget that once the price move below the previous low, all this zone is risky, because in this zone the market is ending the wave 4 in any moment is going to turn around and is going to move to the target that I already mentioned on higher time frames. So without Elliott Wave, how you can know all this information? It's too difficult. But here is clear, and you know that if you take the trade and once the price goes to the previous low, you're going to take your profits. If you want more, because you are seeing a nice red candle at the moment, you can tighten your stop loss, you can take partial profits, but understanding that is ending a cycle, ending a wave of a higher time frame. That is the wave 4, and it's going to turn around. So you have to be ready, if you keep your trade, to move your stop loss closely to the price and take the best price, and then start thinking in the bullish trade. The reversal, validating again everything, and taking the trade, and that one you can hold it till the previous high, that is going to be the 128.30 area, and it's going to be a fantastic setup. So that's my presentation for today. Those are the wave counts. I hope you enjoyed the presentation and you learned something new. Now Jody is going to tell you something else about our services and courses. So thank you very much for your time.
Thank you, Juan. So I'm sure you picked up some trading tips for that. You got 3 trade plans on the euro, on the Aussie, and on the dollar Canada. Very, very clear, right? Yes, I hope you can hear me and see my screen. If you can't, then Juan, get in there and tell me. Okay, what you're looking at here is the basis of what we do, our strategy. So you just learned all about Elliot, and here you can see Elliot as well, and we have our strategy here. We have one of the most comprehensive trainings on the market, we feel. It's 30 years in the making. That's how long I've been trading. And it's just an amazing combination of analysis, strategy, the 3 pillars, analysis, strategy, and accountability. So what you're looking at here is our strategy, including Elliot, Fibonacci, harmonics, and some indicators. And we have trade plans for each. We have wavy tunnel trade plans. We have 6 different trades. Our 4 trend trades, our 2 end of trend trades. We learned about those in our talk about market cycles. You heard Juan talk about finding the end of the move and market reversals. So we have our trade plans for that. We have our Elliott Wave Ultimate Trade Plans, which is just amazing. It's the icing on the cake. It includes Elliot, Fibonacci, and harmonics with 5 trade plans. Do you need to learn all of these trade plans? No, but you probably will. They're not that difficult. And this is what we teach you in our comprehensive training. So there are 4 courses in one. And it's all in the back office, in the members area. We have section 1, the Elliott Wave series, section 2, the Wavy Tunnel Plus, section 3, the Fibonacci Primer, and section 4, Harmonic Patterns. It is so comprehensive with numerous examples, and we have live webinars to go along with the modules. So Andre P. from Canada says, reveals the order behind the seemingly chaotic market. As a harmonic trader on a daily basis, I get to witness firsthand how the rhythm of the market is in sync with the mysterious Fibonacci order. The way price adheres to the hidden order governed by the Fibonacci numbers beneath the surface of seeming chaos, always leaves me in awe. The Elliott Wave Ultimate System is an evolutionary leap in our understanding of this Fibonacci order because it combines both Elliott Wave and harmonics and reveals the profound interconnection between these two methodologies. No other trading system has so clearly demonstrated that ultimately these two methodologies are one, and the convergence of harmonics, Elliott Wave, and Fibonacci reveals the missing link in our understanding of the Fibonacci order behind market action. If you want to expand your understanding of the market and take an evolutionary leap in your trading, I highly recommend the Elliott Wave Ultimate course. He recommends it, I recommend it, Juan recommends it. You're joining a community of like-minded traders. It is very profound. We just started a new course with a solid core group of traders, and they are just blown away. These are traders that have already taken numerous courses, but they are blown away with what they are getting. We have lots of bonuses. So not only do we have the coaching webinars, but we have 2 months access to our live market analysis rooms that take place daily in London and in New York. 2 hours and 15 minutes in London and in New York to go through the markets and come up with trades. One provides a daily counting service and a daily video. Every single morning you will get a daily video outlining the trades for the day, just like you heard him speak about today. He does exactly the same thing in the videos every day. So the daily counting service, the live market analysis rooms, then once a week we have an additional live market analysis room where we talk about the harmonic patterns, everything that you learn in the course, setting up for analysis. You get your comprehensive trade plans. We have tip clips. We have a private membership forum. You get the course manual. You get amazing support from our amazing team. So fxtradersedge.com/special. Maybe Juan can type this in. I'm not looking at the box. fxtradersedge.com/special. This is where you need to go. These are the prices. Elliott Wave Ultimate is what I would recommend. But if you want to start with the Elliott Wave series, just the Elliott Wave portion, knock yourself out. If that's part of your budget, you can always upgrade. The Elliott Wave Mastery contains the wavy tunnel, the system, the strategy, plus the Elliott Wave and that. Okay, so fxtradersedge.com/special. And email me at jody@fxtradersedge.com if you have any questions, JODY. Thank you so much, everybody.